What's going on, guys? Today we're back with chart analysis. We're not at our normal setup, but that's not gonna stop us. I was just coming back from a run. I'm like, dude, I forgot. I almost wasn't about to film this video. So we're here. Today I want to go through my ETF holdings, and just some basic long-term stuff. There's more than likely going to be background noise because I'm in a small house with other people in it. But let's not let that distract us. Okay. So right now, because I don't think I covered this, what I'm actually holding right now, in terms of stocks, my ETF. So I want to do a couple things here. So I'll just put in a chart quick. And then I'll show you what I am holding. So we'll start from, this is active shares. AGNC. Basically, the strategy is to buy near fair value on the weekly chart and with a monthly buying pressure. So the stock AGNC fit the criteria. Does that mean we're going to make money on it? No. I mean, odds are probably not in our favor, bro. Like, honestly. But there's how we manage risk in this ETF is more important. So, yes, you take the shot. Does it need to go in? No, because we're not oversized. So we have a small size in this position. Yes, it could bounce. Does it look strong right now? No, it doesn't look strong at all, but we're in it. APLD, same thing. Buying pressure on the monthly within the fair value. Once again, strength. No, I mean, remember, like tech, everything is falling. So do I think Applied Digital is just going to totally reverse? Probably not, but it does fit the criteria. And if we lose the trade, we're not losing that much. What I do think looks good and actually has strength is mining and materials. So mining went on a massive run. If you remember that, silver all went parabolic, and then it's just a pullback. That doesn't mean the run's over. This is looking solid. It looks like hopefully we bottomed here at fair value on mining, because remember, I don't know if you remember that massive liquidation on silver and gold, but it looks like it found support potentially. Obviously could continue going lower, but mining is the one sector that I'm like, okay, this looks actually solid. Cypher, same thing. It's within the fair value. Doesn't look strong, not necessarily. Comcast, same thing. Hopefully you get the point. Green monthly, buying pressure right here at fair value, not overpaying for something. Silver, once again, another mining theme. Hudbay Minerals, same thing. As you can see, there's kind of like a theme here. Invesco, it fits the criteria, and that's what you can control. Uranium, YOEC. So yeah, all of them fit the criteria. We're holding them. That's it. And then these are stocks that we've had before, but now we're applying the same system. So iron, I'm actually going to sell on Monday, which sucks to say, but look, it's red. It no longer fits the criteria. Yes, this is green, but I guarantee you iron probably fucking opens low on Monday and just continues dropping. Like, look at this massive sell-off potentially. You just got to trust this. Like, yeah, I mean, this is more likely not going to be wrong. You know, you'd rather not have your biases get in the way. Oh, it's an AI stock. It's like, okay, re-enter when the criteria are met again. Nebus looks good. Yeah, massive sell-off, but still green, holding. Navitas Semiconductor, still holding. Green. That's all the shares I'm holding. Yes, this is a good amount, but I want to show you something. So this is actually the tracking of my ETF. Here's all the positions that you saw. Iron and Nebus and Navitas are not necessarily part of the ETF, but now I'm applying the strategy to them. But the point is look at this percentage. So obviously you see some of these are higher because it's just in a different portfolio. Some of these are my options portfolio, and I have way less money in that port. But yeah, that's the cost basis. It's not a lot of money. Just exposing myself right now, but I don't care. Like, it doesn't matter. 2%. This is same. It's not different. Like, yeah, it says it's 7%, but it's not like, oh my gosh. You know what I mean? Same consistent cost basis for all these stocks. So if you say I lose on what we said, AGNC or APLD looks weak. Oh my gosh. If we lost the entire position, we'd lose 2% of our portfolio. This is the win. And then if you can hold winners, you have shares. You can hold these for years if it continues going up. Do I think it goes up forever? No, but here's where you take profits on a stock that actually goes the way you want it to. So these deviation bands on Devon, I had this stock and I sold it way too early. But yeah, like you would want to take profits this week right here. And then, if I hit this band, I'd want to sell about half my position. Let it ride out, especially if this is still like heavy green. Try to scale out right here. And then boom, look at this. And then you should probably scale all the way out, like up here. Just because it's a deviation band. But as you can tell, all energy stocks are going through the roof, like Exxon. Like this is uncharacteristic. I mean, when this bull trend started, like if you were buying near fair value right here, right, this is criteria met. 57% on Exxon Mobil. So yeah, so what I want to do right now is try to find a stock. So some of these, I was doing some searching last night. Some of these small cap stocks freaking boom. Like, dude, you put $100 in here. I've seen some crazy ones. 39% in a week. Once again, if you're sizing really small, like seriously, this went doubled for 28. Look, about $1 to $4. 381, like 400% in 3 weeks. Am I saying buy these? Like go all in on these? No. But if you put like 2% of your port, I think this is the best looking setup that I found last night. Energy Vault. Could even hop in on Jiba. This one potentially bounce around here. Once again, silver and gold. Gold. If you get anything from this video, I think mining does well coming up here. Especially given, this looks pretty good too. But all gold, silver mining companies are all setting up the same way. And then energy too. I like this one. This is probably my favorite setup. And yeah, once again, it's risk management at the start. So let's try to find some setups. So this is the only screener I have, like over 3 million, and I don't want anything less than $1. I'm just gonna scroll down to where we kind of were. I'm gonna continue filming until I find one good setup. Dude, I could filter this by sector too. And why did I pick these sectors? Because they're looking better right now. Yeah, usually I would have 2 monitors. I already looked at Sweetgreen and TripAdvisor. I think some of the funniest stocks to make money on are like restaurants. Like, make some money on it and then go there. Be so chill. All these people lining up like on campus. The Chipotle there gets slammed. And like, how many people do you think would make money on the stock? Not very many, but they will all line up. But they wouldn't think about buying the stock. Like, just think you could buy a share of Chipotle for the same price as like 3 bowls. Would I recommend buying Chipotle right now? I mean, if you are like a long term, like, oh yeah, no, I love Chipotle, like, this is going to the moon, like, I mean, this is probably the clearest bear trend I've ever seen in my life. So, no, I wouldn't buy Chipotle right now. But, like, you can make money on, like, restaurant stocks. It's kind of cool. I don't know. Yeah, and I'm using, like, a janky ass mouse. Energy is gone. Oof. Like, you would have entered Goodyear right here. Probably could have made money that month or that week. Oof. Look at this. Under Armour. Like, no way you make money on Under Armour stock. It's just these consumer stocks. It's kind of funny. I mean, I'll be honest, you're sitting in a bear trend long term. Right? Dude, what was Under Armour stock? Under Armour stock was like $52. Like, what? It's not a bad setup, though. I'm just saying you're catching a bear trend. Right, here's a unbroken high. Technically, this high was actually broken, so this could be a higher low right here. There's a setup. Under Armour. Yeah, dude, Lucid got killed. Oh my gosh. No way this was over. Dude, this was a $400 stock. Isn't that insane? Look at that IPO bounce. Oh my gosh. This thing was over $600. Isn't that insane? Wow. Lucid cars are cool too. Nope. Ooh, AQN. Power and utilities. Bang. Let's go. Right there. Right? Bullish. Right at fair value, boy. Let's go. Looks solid. There you go. There's your good setup. I like this one. I like this one. And remember, it's not, oh my gosh, I'm putting everything in AQN. No, I'm putting 2% max. Or like not, 2 to 3%. Not. It's consistent sizing, so you can cut the losers quick. You'll lose, sometimes you'll just get absolutely bodied and you'll lose 50 to 60% if it just completely dies off of earnings or something. But this is actually a really good, I like AQN right here. I'll probably cop some shares of that. Okay. I mean, this has been a over $100 stock as well. Dude, like, what do you think happened for this to happen? I'm just like curious. Like actually, like oh, you know why? What happened? It was COVID. That's insane. Look at that. Isn't that crazy? But this is like COVID. March 2020, like that's when COVID bottomed out for a bit. Actually crawled right back. If you entered here, you went on a massive, and this is the strength of the strategy. If you can actually enter on one of these bull rounds right here, like if you were playing the strategy, you tried to get on this candle right here or this one without chasing it too hard, or you get in right here and you catch. But seriously, from here to here, right, you would have probably wanted to scale out like up here. You doubled. I'm just saying. This is not a bad setup. I'm in VFC, like Campbell's. It's just, when you start trading shares, you realize like you can make money on so many more stocks. Whereas options, you can only make you can make money on stocks, but like, you're only gonna really want to trade the stocks that are super liquid. Of course, I'm still gonna trade options because I need the leverage. I don't need the leverage because the leverage actually bites you in the ass half the time. But yeah, I mean, I like trading options is kind of stressful. I mean, I'm sure that's not news, but I think it's worth continuing to try. This thing wanted to break. It really wanted it to. Just didn't. LKQ. So yeah, we already found a good amount of setups, and this is just literally just doing the work. If you know your criteria, then you can just do the work. I don't even know what this means, bro. Make money on SIG. No way. This is Coors? I didn't know Coors was public. I mean, I guess I don't know why it wouldn't be. But that's a chill ass ticker. Tap. Bud. What is ABEV? Bro, my whole portfolio is Tap and Bud. I know Berkshire owns a good amount of Guinness, unless they sold that. But I remember reading about that. And I think Tanqueray, the gin. I'm really interested because I bartend. It's kind of interesting. Wait, what was Bush's? Oh, it was Bud. Looking tough. Yo, why is Bud setting up? No way. Bro, and look how much it is. It's $67. Bro, look at this run, dude. On Bud. Say, why did Bush just fucking fly? Like, what? Brother. This is such like a chill ass thing. $67, Bud. That's good. I can buy Coors stock. There's people buying $8 beers. Like, go buy some Tap. Go buy some Bud. You know what I mean? Like, it's like I can't lose money buying a beer. That is facts, actually. I was in Celsius for a while. I was thinking dying. But like, dude, here's the thing. You don't marry a stock, right? You don't marry it, boom. You take Celsius up to double your money, dude. It's just like, it's the patience game, and it's like you're gonna lose trades, but I don't know. Just play for fun. Just play for fun. You need a little bit of money, obviously, but like, you could very easily go spend $100, you know, going out to eat. You know what I mean? Yo, why is Kava looking decent? It's kind of an expensive stock. Doesn't look that great. But yeah, I'm trying to like remove MGM. Dude, if MGM breaks out of this will look pretty good. Like above this level. But yeah, I'm trying to like minimize tech exposure right now. Well, that's not. Oh wow, see, you just find these things that just rip, like things you've never heard of. Darling Ingredients. Oh my god. Yeah. Wow, look at that. Just gapped. Low-key setting up, though. That's crazy. Bro just fell off a cliff. How much you want to bet Hormel is just going ridiculous right now? Nope. Okay, I mean, we already found a good amount of stocks. Okay, 3 more. KVU. Bang. There you go. Doesn't look amazing, but like it's there. Chipotle, PCG. Not bad. Hell no. I don't know. It's just funny. Like, I don't know why. It's so funny. To buy, restaurant stocks. But, bro, energy stocks, I'm telling you. Rippy. Oh my gosh. I remember I had an Edison International call once. Look at this thing. Such a good run, bro. It's like, oh, it's only 48%. I can make 48% on a 0 DT in 4 seconds. Like, yeah, you can. But I can repeat this week in, week out, and not freak the hell out, you know, while I'm holding. And I still trade options. Like, it's not like I'm only trading shares. Like, nah. For sure, definitely trading options, but rather just have something I can repeat. You know what I mean? You're like, why don't you just repeat a option strategy? We're working on it. Look at these massive sell-offs. Oh my god. But yeah, I don't know. In terms of options, like, oh, I'd be buying AMD too. I exited Rocky Lab. I mean, nothing looks good. Like, I'm buying QQQ. Like, it's not like I'm, oh my god, I'm freaking the fuck out. Like, no, I hope, like, probably drop to 520 right here. This will be the next big support level. I mean, it kind of already lost this level, 567. Yeah, you're probably going to find support here, but I would say buy QQQ and expect to lose money on it. But don't try to time a bottom at all. Just buy as it, like, if you're a long-term investor, right? If you're not retiring tomorrow, buy through these dips. Buy this. Buy when it consolidates down here. And then let it pump your bags and trade options all the way up here. Go long on tech stocks all the way up here. Right? As you've seen on my ETF, we have very little tech stocks. The finance stocks are, like, you could say this is tech. Like, in terms of tech stock exposure, APLD Cypher. That's about it. And then it's, well, I have it right here. Finance, tech. So, like, we have 2 technology stocks that will probably cut pretty soon. Communication, consumer. I think I'll probably end up adding more consumer stocks. And energy stocks are a little far gone. But yeah, I like mining. Seriously, like, if I could kind of increase the exposure there, I honestly would buy another mining stock. But yeah, let's finish up with the conclusion of this video. ETF watches. I like Energy Vault. I guess not all energy stocks are too far gone, but, like, remember, bullish market structure. Come back to fair value. Nice point of control there. I like, not even gonna try to say it, but this looks good, right? Utilities. bullish structure, near fair value, not a super expensive stock. Okay, allocate 2%, you lose, guess what? Max loss. That means you lose everything. That literally means the stock goes to zero. You lose 2%. That's the max loss. So like even if you are taking losses, like on iron, a loss in this strategy is this turns red while you're holding it. Like this, I'm gonna sell iron on Monday unless it bounces like 25% on Monday. It's not going to. Honestly, probably should just cut losers on Friday, like late. This is already red, so why would I play it on Monday? Maybe it's cut losers Friday, add new on Monday, you know? Because by 2:30, because the market closes at 3 in my time zone, so at like 2:30 on Friday, if you're not like doing something, you know, cut the losers. I mean, do I think iron might bounce here? I mean, yeah, but like I don't need to hope. There's no reason to hope because I played the hopium game in crypto on an option before, and that's literally my 2 biggest losses ever. Why would I just cut it? Like it's telling you. So yeah, we might switch cutting losses to like a Friday thing. You know, going to the weekend, oh, feeling better. Give the week time to fizzle out, and then add new on Monday. But yeah, overall, we're mostly exposed to finance and mining. Minimal exposure to tech. And yeah, these are the setups I found today. No way, Under Armour. It's so crazy. These are my 2 favorite, probably. Energy Vault. Algo. And then I guess I can go over, like, the last thing is, like, I am basically fully sold on what I'm going to be doing with in terms of my ETFs. Because I think, just in general, if you have time to invest, buying ETFs is not a bad thing. Like, yes, you can beat the market with individual stocks, but why not just have a way you can just not question things? Clearly, I'm buying individual stocks right here, right? These are all individuals. And I still do buy individual stocks. In my Roth, I buy individual stocks that you'd like to see grow long term. So it's not like I don't buy individual stocks, but I think a good way to use profits that you're accumulating in the market is putting them into ETFs. And it's like it's here's the thing. Like, are you really going to regret buying an ETF when you're young and continually rotating profits into and building your account? No. I mean, ETFs are the market. So what ETFs do I buy? Yes, I will tell you. So I'm buying QQQM. Tracks QQQ. It's the same thing. It's just cheaper. And it has a lower expense ratio. Strong sell. Like, this is the shit they show you. It's a strong buy, brother. Depends. Once again, if you are trying to retire, pull out your money, you should have sold right here. Like, fuck it. Get out. But if you're like me and wanting to increase your market exposure, I'm buying all the way down. I'm buying all the way down here. Buy. So this is my Roth, QQQM, VTI. You're like, why are you buying index funds? These are ETFs, but why are you buying this? Like, oh, it's so boring. Because, listen, it's easy. Like, why make it hard? It's easy and it's effective. Okay, your money's going to compound, right? Your money's literally going to compound. And then you pair it with individual stocks, you're increasing your growth, right? It's about growing with time. It's not, and there's so many different ways you can invest. You know, there's so many ways you can invest. And here's what I'll say to that. There's no wrong answer. People will tell you, you have to do this, you have to do this. You don't have to do anything. You literally don't have to do anything. Buying SPYM. Once again, this has a lower expense ratio than IVV and VOO, and it tracks the same stocks. People are like VOO religious. Like, dude, it's fine. Except in Schwab, you can't even buy fractional shares. I'm not buying a $582 share. Rather buy something cheaper. It's the same thing, literally, same thing. But whatever you like, if you want to buy VOO, because that's what everyone else does, like, no problem. It's tracking the same market. And then this is my Schwab account. I'm just buying this. Dude, this thing's high as hell. Damn. I didn't realize this is where I'm buying it at. Holy shit. Holy shoot. I haven't actually looked at this chart. I mean, it's not like it's also up because this is like oil stocks. You know what I mean? Yeah. I still trade options. I still buy individual stocks. And I'm buying ETFs because it's an easy way to compound long term. And why, like, if you have time on your side, why not just do something that you know you can repeat and just stop questioning? You know, it's, oh, I have to pick the right stock. There's no right stock. Like, every stock, oh, I have to hit a 10 bagger. Like, yeah, that's why I have the option to buy individuals, right? You don't need to limit yourself to only to whatever, right? But just like, if you don't invest already, just start. Like, literally, like, we got cash loaded, right? You know, I could be on some spring break trip spending out the ass, right? But nah. I'm trying to buy the dip. You know what I mean? And it's like, oh, you're so boring. You're so boring. Nah, bro, I'm trying to buy this. You know what I mean? Like, that's it. That's it. It's a beautiful day here. ETF strategy, size properly so you can lose trades without losing your account. And let the winners win. You can see trends throughout the market. Mining, once again, looks good. And yeah, I bet you half of these will be losers. So I'm not too worried about either one of them, any one of them. But the ones that win, dude, you can, like, okay, let's, oh, I bought Hudbay at $9. It's just, it's crazy, man. Crazy. So, that's it. Let's go. I'll see you later.